All right. Hello, everybody. Thank you for tuning in. So let's just take a look at some stocks here as just a learning lesson. One of the things I saw today um, was a really good example of the old ascending triangle pattern. So that was NAK, this Northern Dynasty um, Minerals or whatever it's called. So this is a really good example. Ascending and descending triangles tend to be pretty reliable chart patterns. Come on here. I don't really pay attention to most patterns because I think most of them are frankly kind of, they're just not that reliable. But here's a perfect ascending triangle pattern. And let's just think about what this shows us. Let's not think about the name. Let's not think about, oh, it's an ascending triangle pattern. Let's just think about the dynamics that this pattern or this thing that has manifested itself on a chart, because that's what chart patterns are, right? If you look at them the right way, when the action of the trading or the price action is going through a thing where the bulls are taking over from the bears or the bears are taking over from the bulls, it might manifest itself on a chart as a reversal pattern, right? A V pattern or a rounded top or bottom. This is an ascending triangle, which could be a reversal pattern or a continuation pattern. These guys pop up all over the place, as do descending triangles, which are their mirror images. But think about this, right? So basically, the sellers hung out around 120 since March. As time has gone by since March, the buyers got more aggressive. They came into the market at higher prices. So the ascending triangle pattern is just a graphical illustration of complacent or patient sellers and aggressive buyers. So now the stock has gotten way up here. It's way overbought. I mean, I'd have my stop here. This is not something I'm recommending. It's just something one of my students asked me about today. Another kind of really classic ascending triangle pattern has popped up in the biotech industry, right? Same kind of a thing. I mean, it's not as perfectly defined as what we just looked at, but the resistance became support. The sellers hung out. The buyers got more aggressive. When markets go in peaks and valleys, and when the valley forms at a higher price than the prior valley, we call that a higher low. And that just shows us the buyers are coming in at higher prices. They're getting more aggressive as time goes by. All right, so I like industrials right now. Industrials are kicking ass. It's like screw. I mean, I hope you guys don't take this as a offense, but like I ain't here to make people happy. I'm here to make people money. Right now, guess what was the most? Guess what sector outperformed tech over the last year? OG utilities, OG industrials. Tech is up 9.5%. Everyone looks at tech. No one I talk to looks at industrials. 9 out of 10 people that I talk to are like, okay, SoFi, Palantir, Nvidia, blah blah blah. No one ever asks me, what do you think of Dow Chemical? What do you think of, whatever, some random United Airlines, blah blah blah. But anyway, there's a lot going on here in this sector. So 3M is a trade that I just put on my list for a buy because we have a breakout. So resistance is like this large group of sellers. You can see here the resistance is very clearly defined. Now that we got above it, what does that tell us? Well, it tells us that the people who created the resistance, the traders and the investors who were selling around whatever 153, 154, they had put a top on it. But now the market is above that. So what does that tell us? Well, there's a good chance that those sellers are gone. They either cancel their orders, they finish their orders. So regardless, when you take a large amount of supply off of a market, meaning sellers, when the buyers come in, they're going to have a hard time finding people to buy their shares from. They're going to have to jack the price up. That's why a breakout above resistance tends to be a positive thing. And also, too, here, look at this. We also have the higher low here. So that's 3M. I mean, this is a buy, in my opinion. Let's look at Caterpillar. I love big tractors. Caterpillar. Oh, look at now. This is on the verge of a breakout. So if you're a breakout trader, here's a trading idea right here for you. Okay, we haven't broken out yet, but one of the reasons why breakouts are a valid strategy is because, again, we get above that resistance. It tells us that, or we can infer. It's not obviously in stone, but we can infer that the sellers or the people who created the resistance are gone. So if Caterpillar breaks above this, there's another trading idea right there. So at this point, I'm not thinking about tech. I'm not thinking about Nvidia. I'm thinking about boring old industrial companies. Let's find a random old boring industrial. Oh, look at that. Oh, look at that. Oh, all right. Anyway, Dover Corp. All right. There's one I haven't looked at in a long time. Let's look at Dover Corp. DOV. Now I have no idea what these guys do, but let's just take a look at the chart. And I don't know why that comes up. So let's go to 1 year. Let's go to, I don't know why this is showing as this. Not a, I mean, it's looking at candles. All right. I don't know. Maybe that's why we've never heard of Dover Corp. All right, let's look at Stanley Works. SWK. Oh, I see what's going on here. All right, I got to put it in a different format. All right, so SWK. I was looking at the wrong format there. So, oh, there you go, right there. There's another potential breakout. Look at that. So, right at resistance, support was resistance. Boy, here's another one, SWK. So, not a breakout yet, but we see this familiar, generally reliable uh, ascending triangle pattern. This looks like it's about to go. Caterpillar looks like it's about to break out. Now, Stanley Works, Caterpillar, they look like they're going to break out, but maybe they don't. A lot of times when something gets to a resistance level and it doesn't break out, it reverses and it comes in hard. So this could be a long idea if it breaks out. If it doesn't, we're going to look at this on the short side, right? We're going to look at this at buying puts. So Stanley Works, Caterpillar. All right, let's look at one more. JB Hunt. I haven't looked at that stock in a while. JBHT. Oh, wow. Look at that. Look how similar the chart looks. So I think this is probably broken out. This has gotten above the resistance. And the resistance has become support. So that sets the stage for the next move higher. All right. So the industrial sector is abundant with trading ideas on the long side. On the short side, meaning buy puts, there could be some ideas in the consumer staples sector. I don't know. Looks kind of neutral at this point. All right. Anyway, hope this helps. I mean, we're not going to figure out the mystery of the universe tonight, but yeah, there's a lot of trading ideas out there. Forget tech. Let's think about industrials. And in the last year, like we talked about, industrials have dominated the market versus technology. And yeah, that's it, everybody. I will see you all soon. Check me out tomorrow, and I'll talk to you then.